A very good afternoon, all of you. Hope you all are doing good. May God bless you all. Welcome to Commerce first year class. In yesterday's class, we have done final account problems with adjustments. Okay, we have done final account problems which are a sure 20 marker in your IP exam, and we did it with adjustments. I said 5 to 6 adjustments. Only those will be asked. So I am taking only those problems having those 5 or 6 adjustments. Okay, so in accordance, let us move forward and take question number 4 of your textbook, page number 330, page number 330, question number 4. Okay, so before we actually start, let us prepare the formats. Let us prepare the format for trading, P&L, and balance sheet. We are doing on the next page. We are doing on the next page. So simultaneously, we are preparing trading and P&L account, and the leftover items pertaining to balance sheet we are taking later. Okay, so this is our trading account. This is our P&L account. So let's go through the question once. From the following trial balance of Messrs. Manoj and Sons Traders, prepare trading, P&L and balance sheet. What are the adjustments? Closing stock, outstanding salary, prepaid insurance, create a provision, depreciation on furniture, machinery, outstanding wages. Yeah. Okay. So trading account of Messrs. Manoj and Sons. This is trading account of Messrs. Manoj and Traders Sons for the year ended on 31st March 2018. Similarly, profit and loss account of Messrs. Manoj Traders and Sons for the year ended on, right? Particulars amount. The format remains the same. Particulars amount. Okay. Shall we? Okay. Adjustment we go through once again. Closing stock. Then we have outstanding salaries. Insurance पे adjustment है. Provision for bad debts create करना है. Depreciation is there on furniture and machinery. Outstanding wages are there. What is the first item given? Purchases. Purchases we will take on the debit side of trading account. 2 purchases. What is the amount given? Purchases amount is given as 20,000. See, on the credit side, if we have any returns, we don't. So I can directly take this item in the outer column because there are no purchase returns. Then salaries. Salary is a P&L item. Salaries is a P&L item. I am writing it on the debit side of P&L, and the amount is 5,000, which I am writing in the inner column. Sir, why are you writing in the inner column? Because there is an adjustment pending on that. Okay. Then wages. Wages are a trading item. Wages will appear in trading account on the debit side, and the amount is 7,800. This also I am taking in the inner column because there is an adjustment on this as well. Then we have building. Building is a fixed asset. It will go to balance sheet. Okay. Then we have carriage on purchase. Carriage on purchase is a direct expense. Carriage on purchase is a direct expense. It will be taken in P&L, trading. Carriage on sales will take in P&L. Carriage on purchase is taken in trading. Carriage on sales is taken in P&L. Carriage on purchase is given as 400. Then gas, coal, water, fuel, all these are the items related to factory. Gas, coal and water. Gas, coal and water, 200. Office expenses will take in P&L. Office expenses will take in P&L. Office expenses are given as 600. Then commission. Commission is also given. Commission is also a P&L item. Debit amount 300. Next we have debtor. Debtor is a asset. It will go to balance sheet. Next we have opening stock. Opening stock is the first item we take in trading account on the debit side. So opening stock is given as 6,000. Then we have machineries. Machinery are a fixed asset. Insurance. Insurance is a P&L item. And this amount I will write in the inner column because we have prepaid insurance for adjustment pending. I'll write the item in inner. Wherever there is an adjustment, wherever there is an adjustment, that amount we have to write in the inner column. And when we come to adjustment entries, we will give a treatment. Then we have bank balance. Bank balance is an asset. Bill receivable, asset. Cash, asset. Furniture, asset. We have taken all the items of P&L account and trading account from the trial balance of the debit side. Now let us go to credit side. Sales. Sales. We take sales minus sales returns. But sales returns are not given. So I'll directly take 52,000 in the outer column. Creditors, liability. Creditors, liability. Capital also will appear on the liability side. Interest received. It is a indirect income we take on the credit side of P&L account as interest received. If it is interest paid, it will come on the debit side. Interest received 2,000 will come on the credit side of P&L account. Next, bills payable, liability. Bank overdraft, liability. Outstanding rent, liability. All these are the liabilities. Okay, so we have taken all the items of trading account and P&L account from the trial balance. Now let us come to the adjustments. What is the first adjustment? Closing stock. Closing stock will once appear in trading account, credit side, then again it will appear in the balance sheet. Closing stock is given as 9,000. Closing stock is given as 9,000. Outstanding salaries. Outstanding salaries. Outstanding salary is a liability. And since it is an adjustment entry, we first have to add it here. Outstanding salaries. We have to add in P&L account according to accrual basis, according to accrual concept. We have to add this 1,000 here. And then again, this 1,000 will be shown as a liability. Next, prepaid insurance. Prepaid insurance. That is insurance paid in advance. It is an asset. We have to deduct here first. Prepaid insurance, 100 rupees. We have to deduct and take 300 here. And this item, 100 rupees, will appear in the balance sheet on the asset side. This 1,000 outstanding salary is a liability. Okay. Then create a provision for bad debts. Provision for bad debt is created on debtors, good debts. Provision for bad debts is asking us to create provision for bad debts at what rate? At 5%. Provision for bad debt is to be created at 5%. What is the value of debtors given? You see the trial balance. Debtors are given as 25,000. Debtors are given as 25,000. On this, we have to create a provision. So 25,000 into 5 by 100, that is 1250. 1,250. So we have to show this 1,250. Two effects, no? Once we have to deduct from debtors, and in P&L account, we have to show on the debit side. This 1250 will show on the debit side of P&L account, and in balance sheet, asset side, we take debtors. What is the value of debtors given? 25,000. From that, we will deduct provision for bad debts, 1250, and 23,750 we will show as asset on the asset side. Okay. So here in P&L account, we will take provision for bad debts at what percent? 5%. How much? 1250. The second adjustment, as I told you, will deduct in balance sheet from debtors. Then depreciation on furniture. Depreciation on furniture is a loss. We have to deduct 200 from furniture and also show it in P&L account. To depreciation on furniture. To depreciation on furniture. How much? 200 rupees. And similarly, depreciation on machinery is 600 rupees. To depreciation on furniture, 200, and machinery, 600. Okay, these two again will have effect in our balance sheet. From furniture, we will deduct 200 rupees, and from machinery, we will deduct 600 rupees in the balance sheet on the asset side. Then outstanding wages. Outstanding wages are added to wages and then again shown as a liability. Outstanding wages. What is the amount given? 1,200. So this is now 9,000. Now we have taken all the adjustment entries. We have prepared trading account and P&L account with adjustments. Trading and P&L account with adjustments we have done. Now let us close. Let us close and see what is the result of trading account, what is the result of P&L account. If you remember, what is the outcome of trading account we get? The outcome of trading account is gross profit. And what is the outcome of P&L account? It is net profit. What is the total? 61,000. What is the total? 61,000. Credit side total is 61,000. And debit side it is 26, 35, 35,600. 35,600. Okay. $25,400. So 25,400 is the gross profit carried down to profit and loss account. 25,400 is the gross profit we will show in P&L account. So this gross profit we will show on the credit side by gross profit brought down 25,400. By gross profit brought down 24,400. Then 25, this will get 27,400. What is the total on the credit side of profit and loss account? You see 25,400 plus 2. It is 27,400. From these, deduct the items on the debit side. So what are the items? 6 plus this, 6,900. 6 9 plus 3, 7,200. 7 2, 8 2, 8 4, 8 6, 9 2 5 0. The total is 9,250. What is the total? It is 9,250. Deduct these two, you'll get 150. 18,150. We are getting 18,150. 5 plus 1, 6, 6, 3, 3, 1250, 200, 6, 6,900, 7, 2, 7, 4, 8, 4, 8, 4, 8, 6, 9, 2. 9,250. The book answer is 20,150. Did I miss anything? Salaries 5, 5 plus 1. Office expense 6, commission 3, debtors 1250, debtors 5%, yeah, 1250. Then machinery, insurance, bank balance, bills receivable. Yeah, nothing is there. So it is 18,150, I would say. Let us see in the balance sheet if we are 25,400 and 2 is 2,027, 27, 69. 72, 82, 84, 86, 9250, 9250, 150. So it's 18,000 done. It is 18,150 only. 18,150 is the net profit carried down to balance sheet. Where do we show in balance sheet? In balance sheet, we'll add this to capital account. Net profit is added to capital account in balance sheet. Okay. Now let us prepare balance sheet. Let us prepare balance sheet. So let us get ready with the format. Balance sheet of Messrs. Manoj, right? Sir? Manoj Trader. Yeah. Manoj and Sons Trader. Manoj and Sons Trader as on 31st March 18. 31st March 18. What is the left hand side called as? Is called as liability side. It is amount. Right hand side is called as assets. Again, this is amount. Okay. So let us take all the items what we have skipped while preparing trading and P&L account. Why did we skip there? Because these are the items pertaining to balance sheet. So shall we? Okay, start with purchase, salaries, wages, buildings. Buildings are a fixed asset. Buildings are a fixed asset. Take on the asset side, no adjustment. Take 24,000 in the outer column. Then carriage, coal, office, commission, debtors. Debtors are given as 25,000. Debtors are given as 25,000. Provision for bad debt is created at 5%, 1250. So the net debtors are 23,750. Next, machinery 12,000. Machinery is given as 12,000, but we have provided depreciation of 600. We have to deduct the depreciation. How much? It is given 600. So 11,400. Next, insurance. Next, bank balance. Bank balance again is a asset. Bank balance is a asset. 4,000. Bills receivable. Bills receivable. Bills receivable are given as 2,000. Then cash. Cash. Cash is given as 1,300. Then furniture. Furniture is given as 5,000, but there is depreciation on this. So let us deduct depreciation. What is the amount of depreciation? 200. So 4,800. Okay. So we have taken all the items of balance sheet from the trial balance. Now let us see the items which belongs to the liability side. See, creditors. Creditors. It is 18,500. Then capital. Capital is given as 30,000. That will take in the inner column. Why? Because we have to add net profit to this, no? And we have to deduct drawings if any. Then we have bills payable. It is also a liability. Bills payable is also a liability. 5,200. Then bank overdraft. Bank overdraft. That also is a liability. 5,500. Outstanding rent. That also is a liability. It is given in the trial balance directly. It is directly taken to balance sheet. Outstanding rent 800. Okay. Then now let us see the adjustment entries. Closing stock. Closing stock will appear on the asset side. Two effects, no? Once we have taken this on the credit side of trading account, and second, it will be shown as a asset. Outstanding salaries. Outstanding salary is a liability. How much? Outstanding salaries are 1,000. Prepaid insurance. Prepaid insurance is 100. That is an asset. Paid in advance. Prepaid insurance is a asset. Then depreciate furniture 200, machinery 600. We have already taken that. We have already taken that. Then outstanding wages, that is also a liability. Outstanding wages 1,200 is also a liability. So now we have taken all the adjustment entries also. Then what is left? One thing is left, no? What is that? We have to add net profit. We got 1850. So I am taking, what is the profit we got? 18,150. So I am taking 18,000. I am adding 18,150. 48,150 is the net figure. Now let us see the total on the asset side and liability side. Let us see what is the total on asset side and liability side. See. Let us do it on the liability side first. 48,150 plus 18. 48, I told you, no, you do total in breakups. 48,150 plus 18, it would be 66,650, 66, 71,350. 71, sorry, 48 plus 18, 66,650, 66, 71, 71,850. Then the remaining 3, 5, 6, 5, 6, 3, 7, 3, 8, 3, 8, 5. 80,350. 80,350 on the liability side. Let us see on the asset side. What is the total on the asset side? 24 plus this, it is 47,750, 11, 13, 4, 17, 4, 18, 4, 18,700, 4, 8, 13, 8, 13,900. $80,450, 18,350, 18,350 on both the sides. So 80,350 on liability side and 80,350 on asset side. Okay, I'll write again. What is the total? 80,350 on the liability side and 80,350 on the asset side. Just go through once. Okay, so what are the adjustments? If you have seen, repeatedly he is asking these 5 adjustments only: outstanding expense, prepaid expense, depreciation, and adjustment on debtors. These are the adjustments, and closing stock, of course, will always be given in adjustment only. So these are the 5 adjustments. If you are perfect with, if you get command on these 5 subjects, their treatment, you can very easily solve the final accounts problem. Okay. So, okay, let us move further. And take question number 6. I am taking question number 6. I again repeat, I am taking only those problems having the 5 or 6 adjustments what I have told are important in the examination. Okay. You have several adjustments, but as expected in IPE, there are 5 to 6. Okay. I am taking only those questions. So shall we? It is on page number 332, question number 6. Page number 332, question number 6. Prepare final accounts from the trial balance of Brindavan business for the year ended on. And what are the items? Salaries, purchase, wages, carriage on purchase, office expense, commission. Okay. And then adjustments are outstanding wages, outstanding salaries, prepaid insurance, create 5% reserve for bad debts, depreciation on furniture and machinery, and closing stock. It is, if you see the adjustments, they are the very same as we did in the last problem. Exactly identical adjustments are given, I should say. Okay, but then we have to, because practice and practice makes man perfect, let us do those adjustments again and again, till you get good command on those adjustments and their treatment. So guys, we are doing question number 6, page number 332. What are we preparing? We are preparing trading account, P&L account, and balance sheet. On the first slide, I'll take trading and P&L account. In the next page, we'll do balance sheet. By this time, you might have got familiar with the items, what appear in trading account, what items will appear in P&L account. Very simple. Office expenses will appear in P&L account, and purchases expenses or factory expenses will appear in trading account. This is a simple thing I told you. Expenses related to office will appear in P&L. Expenses related to purchases or factory. For you to understand easily, I am putting it this way. The expenses related to purchases and the expenses related to factory will appear in trading. Expenses related to office will appear in P&L. You'll easily understand it this way. Guys, we are ready with the format. The first one is trading account. What is the name of the firm? The name of the firm is given as Brindavan Business. Brindavan Business. We are preparing trading account of Vrindavan business for the year ended on 31st March 2019. And this is profit and loss account of Vrindavan business for the year ended on 31st March 2019. Same. Okay. Okay. So particulars amount, particulars amount, particulars amount, particulars amount. Okay. Left hand side is debit side, right hand side is credit side. Okay. So we'll move further. Yeah. We'll start taking the items given in the question. Salaries. What is the first item given? It is salaries. There is adjustment also. So salaries I'll take, it's a P&L item, no? I'll take it on the debit side of P&L account, 6,000 inner column. Purchases, purchases, trading account, debit side. Returns we see on the credit side. Purchase returns will be given on the credit side, but we don't have purchase returns given on the credit side. So purchases I'm directly taking in the inner column. Okay. Then wages. Wages we have an adjustment. Wages will appear in trading account. So I'll write 2 wages. The amount is 7,800. I am writing it in the inner column because we have outstanding wages which are to be given a treatment. Then carriage on purchase. Carriage on purchase will appear in trading. Carriage on sales will appear in P&L. Carriage on purchase is given as 400. Carriage inwards or carriage on purchase and carriage on sales or carriage outward. Carriage outward will appear in P&L. Carriage inward will appear in trading. Both are expenses. One is carriage direct expense, the other one is indirect expense. Next, commission, office expense, sorry. Next is office expense. Office expense, of course, will appear in P&L only. It is 500. Okay. Then, commission. Again, it is a selling and distribution expense, or let us say it is administrative expense. We'll take it in P&L only. Right? Then, debtors. Debtors are assets. Debtors are assets. They will go to balance sheet. Furniture, asset. It will go to balance sheet. Machinery, asset. It will go to balance sheet. Insurance, 400. That we have to take in P&L. But then there is an adjustment on that. So I will write the amount in the inner column. Insurance, 400. Then bank balance, asset. Bills receivable, asset. Cash, again an asset. And see on the credit side, sales, 47,000. Sales will appear on the credit side of trading account. By sales, 47,000. Creditors, liability. Capital is a liability. Bills payable is a liability. Then, coming to adjustments, outstanding wages. Outstanding wages given as adjustment. Outstanding wages is a liability. First, it has to be added to wages in trading account. Outstanding wages, 2,000. So this is 9,800. Okay. Then this wages outstanding will appear as a liability. It will be shown in the balance sheet as a liability. Outstanding salaries, the same treatment. Outstanding salaries, it will be first added to salaries given in the P&L account, and then this outstanding amount will be shown in the balance sheet on the liability side. Next, prepaid insurance. Prepaid insurance are deducted from insurance paid. Prepaid are paid in advance pertaining to next year. So from 400, deduct 50 rupees. So the net is 350. And then this prepaid amount will appear as asset. Okay. So then create 5% reserve for debtors. Create 5% reserve for debtors. Debtors are given as 30,000. See in the trial balance, debtors are given as 30,000. So on that 30,000, we have to create a provision of 5%. Provision for bad debts, provision for doubtful debts, or reserve for doubtful debts is one and the same. Reserve for doubtful debts are created at 5% on debtors, and debtor amount is given as 30,000. See the trial balance. Debtors are given as 30,000. Okay. So then, okay. So once I have taken it here, then again what I will do while preparing balance sheet, I will deduct 1500 from assets, debtors. Next, depreciation on furniture 150, depreciation on machinery 500. Depreciation on furniture 150. Depreciation on machinery 500. Then closing stock, as you know, always is a adjustment entry. We'll take here once and then we'll show it as a current asset, 11,000. With this, we have taken all the items related to trading and P&L account from the trial balance. Okay, now let us close trading account. Let us close trading account. +47 1, 58,000. So credit side total is 58,000. Then debit side you see 22, 31, 32, 200. 32,200. 4821. Yeah. So what is the difference? 5,800. 5 minus 3, 25,800 is the gross profit. Gross profit is how much? 25,800. Where will we show? We will take this gross profit carried down to profit and loss account. This gross profit is carried down to P&L account. Now let us continue with our P&L account. Okay. By gross profit brought down 25,800. So gross profit is 25,800. Credit side total is 25,800. See what is on the debit side. 7,7,5,8,1,8,4,9,9,9,9, 10,600. It is 10,600. So 200, 15,200 is our net profit. 15,200. Net profit carried down to balance sheet 15,200. Okay, go through once. Now what is left? We have to prepare balance sheet. Okay, we have to prepare the balance sheet. Now let us go to the next page and we prepare the balance sheet. Okay, so balance sheet of Brindavan business as on 31st March 2019. This you have to pay attention. When we prepare trading account, we write for the year ended on. Here, when we prepare trading account, P&L account, we'll write for the year ended on. But when we prepare balance sheet, we write as on or we write as at, because balance sheet is a position statement that is prepared on one particular date. As on that date, what is the balance of asset and liabilities will show as it is. Throughout the year, there may be so many changes in the assets and the liabilities. Okay, but we prepare a balance sheet on one particular date, and as on that date, whatever the book value is, whatever the value is in the books, that as it is will take. So we say that balance sheet is a position statement and we take the figures only on one particular date. But trading account and P&L account will do it for the entire, we take the figures of the entire year. Like if I talk about purchases, those are the purchases of the entire year. If I'm preparing my trading account on 31st March and the purchases are shown at say 50,000, those 50,000 are not the purchase of 31st March. They are the purchases of 12 months. Total 12 months purchases, total 12 month salary, total 12-month rent, total 12-month wages. All these are shown for the entire year. That is why the heading. See, I'm trying to emphasize. I wrote for the year ended on. I wrote for the year ended on. But in the balance sheet, I wrote as on. For the year ended on means it has the figure of the total year for all the 12 months, right? But balance sheet is not like that, no? Balance sheet is prepared on one particular date and the balance as on that date only will reflect in our balance sheet. Okay. So again, let us take up the trial balance and see what are the items we missed. Okay. Salaries we took, purchase, wages, carriage, office, debtors. The first item what we did not take is debtors. What is the value given? It is 50. Sir, why are you not taking it in the outer column? Because we have created a provision, no? See here, we have created a provision and I told you this 1500 will again have to be deducted from debtors. Provision for bad debts, we will deduct and we'll take 28,500. Okay, next, furniture. Furniture. Furniture is a fixed asset. Furniture is given as 3,000. Again, on this, we have depreciation. What was the amount of depreciation we had on furniture? You see, on furniture, we had a depreciation of 150 that we have to deduct and take 2850. Then again, we have machinery. Machinery is again a fixed asset. And what is the value given? Machinery is given as 10,000. On that, we have a depreciation. of 500, I guess. What's the amount? 500. So we deduct 500 and we take 9,500 in the output. Okay. Then insurance, it's an expense we have taken. Bank balance. Bank balance. How much bank balance is given as? 4,000. Right? Then bills receivable. Bills receivable. Bill receivable is given as 2,000. Then cash, it is 1,100. Cash is given as 1,100. Now let us take the items from the credit side. Sales we already have taken in trading account. Creditors. Creditors are a liability. How much? 10,000. Capital. Capital is given as 25, but I'll take in the inner column. Then bills payable. Bills payable is 5,800. I have taken all the items of balance sheet from the trial balance. Now what is left? We have to give an effect to adjustment entries. So what is the first adjustment entry you see? Outstanding wages. Outstanding expense. Any outstanding expense is a liability. So outstanding wages again will appear here, 2,000. Then outstanding salaries. Again, outstanding salaries, 1,000. Prepaid insurance. Prepaid insurance is a asset. Then create a provision for bad debts. We have already taken that 1,500 effect here. Depreciation we have taken. Machinery we have taken. Closing stock. Done. Now what is left? There is something left here. What is it? Yeah, it is the net profit or the net loss. What was the net profit? You see, net profit was how much? 15,200. This we have to add to the capital amount. Add net profit. Net profit is added. And if we have any drawings, what do? We deduct. Drawings, if there, we deduct. Okay. Now, we are done with all the items. We have taken all the items of trial balance and adjustments, and we have segregated them into trading, P&L and balance sheet. Trading, of course, we got gross profit. P&L also we got our net profit. Now let us see the total on the assets and liability side. Will it tally or not? Of course, it will. 40 plus 10, 50, 55, 56, 58, 59,000 is the total. 59,000 is the total what I am getting on the liability side. See on the asset side, 9,500, 28, 37, 37, 38, 66, 70, 72, 73, 83, 81, 9,500, 2,850. It is 11, 13, 28 plus 4, 32, 32, 34, 35, 35, 600, then 11,050. 0, 0, 0, 1, 2, 9, 5. 59,000. So on the liability side, it is 59,000. On the asset side too, we got 59,000. This way, our balance sheet got tally. Okay. So these are minor things, but you have to pay attention. Okay. Like writing liability side, writing asset side on the right hand side. These are very meager things, but you still have to write them as it is in a proper format. Okay. So we have done 2 questions for the class today with adjustments. And what are the adjustments? I again and again am repeating because 100% you will get only those 5 to 6 adjustments. What are those? Closing stock. Okay. Closing stock. Where will we show? Closing stock. Suppose if I draw a format like this. Okay, this is trading account. This is P&L account. And this is balance sheet. Closing stock. This is the first adjustment. Where will we show? We'll show on the credit side. We'll show on in assets. Isn't it? Closing stock will show on the credit side of trading account, and then we'll show it on the asset side. Right? Then what is the second adjustment? Let us say it is outstanding salaries. It is, suppose it is outstanding salaries. Then it will come on P&L account debit side. And then it is shown as a liability. In P&L debit side, what do we do? Add to salaries. Add to salaries. Okay. Next. Prepaid insurance. If it is prepaid insurance. Prepaid insurance. P&L debit side and then asset. In P&L debit side, what do? We deduct it from insurance. Deduct it from insurance. Next. Depreciation on fixed asset. Or let us say, for example, depreciation on machinery. P&L debit side. We'll take it on debit side of P&L account and then asset side. What do we do on asset side? Deduct depreciation amount. Deduct depreciation amount from machinery. Okay, then bad debts. Bad debts is given as adjustment. It will appear on the debit side of P&L account. Then asset side, what do? We deduct from debtors. Right? So these are the 5 adjustment entries. Okay, these are the 5 adjustment entries which, and I have shown you what are their effects. Okay. Suppose it is a outstanding wages. Instead of outstanding salaries, they will give outstanding wages. Then we'll take it in debit side of trading account. What do? Add to wages. And then again shown as a liability. Okay. Good. Okay, so I am concluding. Achha, there is one more I should say. Provision for bad debts. Provision for bad debt. Again, the effect is same like this only. The effect is like bad debts only. And remember that percentage of provision we will calculate on debtors. Suppose 5% provision is to be created for bad debts. We will not give 5% provision on debtors. We will say 5% provision for bad debts. This we have to calculate on debtors. Calculate on debtors, good debts. Okay. Right? Okay. With this, today's session is done. Okay, I'm closing it here. Please do practice this. We'll see you again in tomorrow's class. Good day. Take care. Bye. Sorry.